Hey, my name is Calvin Waite. I trade crypto for a living, and it's time to turn on your inner nerd. Okay, so first off, I am not a licensed financial advisor. I don't have any licensing. So this channel has to be taken as watching Calvin trade, his ideas, how things work. So one other thing, this channel is not affiliated with Humble or Blocks or anything else. This is my personal project, and I think there are people that will benefit from it, so that's why I'm doing it. Hey, quick announcement. I have an affiliate code for KuCoin now. So since we're gonna be trading on KuCoin, if anyone wants to follow along, if you use my link in the description, it'll give you 10% off of your trade fees. So it'll save you money, so you might as well use it. Just letting you know. By the way, I had somebody recently tell me that they're getting their alerts, that my videos are posting only at midnight. I'd actually be curious in the comments to know when you're getting the alerts when I publish these. I'm usually publishing them before, let's see, it'd be 3 o'clock Eastern time. They should always be out. Usually I'm trying to hit closer to noon or maybe 1 o'clock Eastern time. So tell me in the comments if you're getting these at a strange hour, because that would be interesting to know. But anyway, so let's talk a little bit about Bitcoin. Bitcoin, we're still heading down a little bit. Just like yesterday, I'm pretty sure, obviously these are my opinions, but I really feel like we are trying to touch the 200 weekly moving average at 23,000 to find support before we turn around. And in my analysis yesterday, talking about how between 5 and 7 days of downside before we start turning the corner, I think that's happening. So either today or tomorrow, we should touch the 200 week moving average and we'll probably turn around. The turnaround is going to be the important part, because if we do not turn around and go higher than 24,500, we need to close above 24,500. So within the next probably 7 days, we need a close above the 100 to really show that Bitcoin is moving. If I pull out and go to weekly and then zoom out, you can see that in the bottom of our bear years, it's like when we finally bottomed out, there is a period, let me see if I can do this the right way. There is a period, so this was the experience for that we had in 2015. When we hit our bottom in 2015, we did have a pretty sweet rally, and this is weekly chart, by the way. And we went up for, I mean, we had a quick up and down, but we had 5 green weeks in a row. And then we had another 6 weeks down, and we nearly closed our candle body below. It was higher, but there was sort of a period of time where we were wondering if we had made it. And this obviously would have broken through some of the things that we're seeing this time around. So if I scroll over to the last one, we did hit our bottom, and then a week later we had a really nice pump, and then we had a couple of weeks up high, and then we started dipping down. And this is the area that we may be seeing as well. So after a couple more weeks, our lows did not overtake our actual low, but this move here was probably enough to scare a lot of people out of their position, because we had come down so far and we were starting to move down again. So if we go to present day, you can kind of see that something similar possibly could be playing out. So we have kind of our move down, and we've gone up for about 5-6 weeks from our, from this candle body, which was our lowest candle body close. And we could have a few weeks of down, and it might scare people. I just don't know if it's quite over. I kind of feel like there's a lot more eyes on it. But even if we did come down for a little bit, as long as we do not close below these, our formation is still intact. Some of the hardest part of trading is being patient and waiting for the market to just kind of run its course. So in this case, we're kind of waiting and watching. Ethereum is way more aggressive. This structure on Ethereum is completely different than Bitcoin. There's a lot more excitement. Even though we've had 4 days of down, Ethereum's having a green day right now, where Bitcoin is having a red day. So that means Ethereum dominance is increasing. If we put a green day in the books, this could look like a turnaround. And this theme of this last few days coming down across a lot of altcoins. They've all hit their 50-day moving average or some pivot point. About, I'd say 60% of them have hit a pretty good pivot point. If I get down to these coins that are above 100, you can see how they're finding support on the 20 or the 100. Dogecoin is finding, coming back to its prior level. There are really good places for a lot of these other coins where we're finding turnaround points. Like we've gone down. So for example, ApeCoin is one that I bought yesterday. And why would I have bought a coin that's gone down for 2.5 weeks in a row? Because we touched the 50 and the 100. Like, even though we've gone down, this is a beautiful pivot point. And a lot of these coins are doing that. They're coming back to a level of support. So is the move over? No, I don't think so. We're moving up nicely, but when we come down, we can get some kind of an indication of where we may be finding support, and we want to buy off of the 50-day moving average or other things. And so where a lot of the other altcoins are finding a place to course correct and head back up again for another swing, Ethereum's kind of giving us a little bit of information in this chart here, because technically this wick here intersects this wick here, so we have flipped from resistance to support. So this would be perfectly fine to continue on and keep really good structure in this chart. So Ethereum's looking great, and a couple days of Ethereum going up it'll translate into these other positions, which will be really nice across the altcoin trades that we have open. But if this does turn around, there is some expectation. In order to keep the momentum going, we're going to have a close above 1986. So we're pretty much going to need to close in the 2000s if we're going to keep the momentum going. So we'll be watching for all of that. There's a couple things I wanted to talk to you guys about today. One is just being diversified. Diversified in crypto is really hard to do because almost all of these charts look very similar. And it's kind of the exception that one of the coins is on its own rhythm, because most of the altcoin market moves together. So if you think you're diversified by having a whole bunch of different altcoins in your portfolio, you're not diversified at all. The only point of being diversified across many altcoins is that if you have a little bit in a lot of them, there is variation between them. So some will get really exuberant and really hit highs. Others may not go so great. So you want to have a broad exposure to them so that you can capture those ones that are really moving. So you kind of want to keep that in mind, especially where we're in the bear market. We need a decent amount in cash. And I'd love to show you my portfolio, where I've got a lot of it is in long-term positions with between Bitcoin and Ethereum, but I have a decent amount of cash just sitting there. And it is for the just-in-case scenarios, and it's also for diversification. If the entire market goes down, I need a lot of cash on the sidelines to pivot and modify and make adjustments and make sure that the positions that I have are safe. If I'm completely 100% invested at all times, it ties my hands a lot. But the amount that I've invested with the leverage and everything that I've got set up, it will make a wonderful return even with money on the sidelines. So it's just all about risk management. So this is just for fun. This was the OP that I've shorted, and with the market kind of going down, it's also helped. But this is turning out to be a really beautiful trade. So that's fun to see. A lot of my other coins are there's some that were up 200% and now they're only up 100%. You know, so the trades that I've made a while ago, they're still intact. Some of the ones that we've talked about on this channel are like SHIB, but see, I just feel like it's okay to play in this range. Like I'm not worried about a couple of strong days down, and same with Doge. I think Doge is having a down day wherever it went. But yeah, here we go. But this is okay. Like we're still just getting outside of the red zone, and we need time to like tell the market that we're on a higher place. These moves are months long. We're not trying to capture a quick, 5 or 10% move. Like this is not where we're going to make our money. Our money is going to be made in these long drawn out trades where we've entered a position, we let it slowly build, we let some of the excitement out, then we deflate a little bit, regain our bearings, make another push. This is not the euphoria stage, not even close. And the money's made in the euphoria stage. So we are still very early on a lot of this. So this volatility and all this excitement, it's totally fine. It's all part of the plan, but it's all happening higher than our entry points that were down here, which makes it a lot easier to manage emotions. My more recent trades, they're a little bit down because the market's down, but this is the work. So the other thing I wanted to tell you about is that there are a couple of rules of trading, and I might post these somewhere, but one is no one ever tells you about their losses. If somebody asks you how your trading's going, they'll immediately tell you about their very best position. And so a lot of people on social media or the soundbite people, they will get excited about the thing that's pumping, the thing that magically hit their portfolio. And there's a lot of stuff in the background that you have no idea what's going on. The advantage with my channel is that we're going to show the good, the bad, and the ugly, and kind of work through all of that. Because if you only show success or something like that, it's not a true view of how trading is. You can tell a seasoned trader by a little bit of their humility because they've just been through it. They know what it's like to be in a tough spot. But being patient through the tough times is when earns you the right to those big payouts. And so that is what I kind of wanted to teach you on this. There's some other things that I've been dying to talk to you about, and I'm not sure how far in depth we'll be able to get, but I'll show you. Somebody asked a really good question. I'll use Digibyte for the example. Well, ontology, whichever one I see first. Okay, here it is, Digibyte. Some people have been asking me why I draw lines on the bodies of the candles instead of the tops. And I want to just show you this. If I was to draw a line on the tops of candles, this is what my channel would look like. I don't know about you, but this isn't very helpful. and it doesn't explain honestly what's happening in the market. What's actually happening in the market is just about as plain as you could see, right? We've got a very strict channel happening. So these wicks, these long wicks, they tell a lot about what's happening. What happened is that we had a bunch of people buying and market makers couldn't keep up. When market makers finally regained control, they brought the price back down to where the true resistance had the market maker not lost control lies. So the market makers are kind of in controls. Whales have their day in the sun. If this was a whale move and they meant for the price to stay up here, it would have closed up here. But drawing a line, we're trying to define a channel of what's reasonable. And what's reasonable has more to do with where we expect price action to be, where resistance to lie, where true market forces to play. And those true market forces play where the bodies close and open. Because this is where the likely scenario that will have issues. So where we broke above this but closed below, that tells you that this truly is resistance. And same with the support side. If we have, if we have a candle and we're looking at bodies now, it just plays on both sides. So we have these channels, and moves outside of the channel are perfectly fine, but they're not going to really matter to us until our candle closes. And you can see on TradingView, at least, it gives you a countdown of how long until the candle closes. So we have 5 more hours in our day before the daily candle will close. And so the information that we're getting from the bodies is more important than what we're getting from the wicks. The wicks will tell you the intensity. Like, there was a lot of people buying and there was a ton of resistance. So where's the true resistance? Well, the true resistance is not here. We're not going to get all the way up here and suddenly find resistance. The resistance is going to happen a lot lower, as is shown here, 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 here. This was a fluke, so we can't use this in our charting. We have to use the bodies where the control is. And if we can manage to get closes and opens outside of this and break trends, now we know that market makers and whales have actually let things move outside of that range, and we can expect movement in a new direction. So there's just a lot of nuance here. And I've also taught you guys recently about moves in and out of these ranges. So for example, when we were talking about this range that was really tight and we had a body close below and then we popped back up, and how that moves our channel, it's because just like a wick is kind of an in and out, and there was resistance there. Well, if we have a body that closes just by pure chance at the end of day outside of our range, but then we pop right back in, it acts almost like a wick rather than a candle body. So that's why you have to make a little bit of an adjustment. When we closed here, this is a true breakout. Like, there was no pop back in. Like, this wasn't a mistake. This is a true move outside of this trend. So this momentum has been broken, and now we're moving down. But just a lot of little things that you can learn from the charts and how everything kind of plays together. But these small wicks, there's very little support here. The smaller the wick, the less support there is. Big wicks show a lot of support. So this long wick, it showed the market that there's pressure coming up. And same with the other side. If a long wick on top is a lot of resistance, it's a sign that there's a lot of pressure pushing back. And a tiny wick like this means that there's very little pressure pushing back at all. This is a red candle, so this is where the pressure would be. But we barely even moved up. There was almost there was nothing here. So the size of the wick shows more pressure the bigger it is. So between all of this, you can kind of get a feel for what is being moved in and out of positions. And so even a single candle can tell you a lot, like the other day when I was saying this is a bearish candle, this is a bearish candle, this is a bearish candle, this is a bearish candle. It doesn't take a rocket scientist to be able to see why. The longer the wick on one direction shows which direction the resistance is pointing to. And so if there's tons of pressure here, but very little pressure here, it's likely to break this direction. It's going to go the way that the opposite side where the long wick is. So hopefully you learned a couple of things, but overall, it's just a matter of patience. I think Bitcoin has maybe a day or two left, and we're going to see some green days. Ethereum is just chomping at the bit to have a green day. We've satisfied our flip from resistance to support, and now we're looking to change directions. So it's looking to me like we're probably going to have a few green days for Ethereum, and then it looks like the rest of the market will likely follow.
Thanks for making it to the end of my video. So just remember, keep your trade small, be patient, wait for the trade to come to you, don't get caught up in all of the hype. You guys are gonna kill it.